now, I'll just give basically the ground rules before we go properly into the section, some basic housekeeping rules. And please note that the call is being recorded, and at all times, all participants are on listening mode. If you are joining us via Zoom, please share your questions via the question and answer section and the chat box at the bottom left of your screen. If you're joining via YouTube, some of us joining via the YouTube, please share your questions in the comment section. There'll be a question and answer segment after the section where all questions, of course, we know we'll have questions, where all of the questions will be treated. Thank you very much. And now it will be time for us to begin the investment clinic. Talking about the right plans to financial freedom, which I mentioned earlier that United Capital will be here to set you up on. Today's topic will be how to build wealth as salary earners. So basically, we'll be discussing that. And right before we begin to draw from the wealth of knowledge from all of our speakers, there's a popular myth around salary earners not being able to go far beyond a particular level of financial freedom, simply because they are 9-to-5 employees, which just equates in the minds of a lot of individuals to be one who lives an average life, and some bear in their mind opinions that they are typically hard workers being used by employees to get rich, and others will just simply say they are low-wage job, right? So now, with all of these mythologies in the minds of our participants, I would like for Emmanuel to tell us one of the questions I want to believe are in the minds of all of our viewers, knowing fully where the topic for discussion today is. Is it possible for us to build wealth with a 9-to-5 wage job?
All right, thank you very much, Tega. Good morning to all our listeners. I think to just answer the question directly, is actually very possible for salary earners to basically build wealth and attain financial independence. And it's actually a very simple step. I know there are a lot of misconceptions out there about how salary earners would always continue to be impoverished, and actually only entrepreneurs, business owners can actually attain financial independence and build wealth. And I'm here to actually debunk that misconception because as a business owner, they said that one of the ways to basically achieve this financial independence is to have multiple streams of income, having at least 7 streams of income to ensure that you can actually achieve financial independence. However, as a salary earner, it's actually still possible to go through that route. And the easy way to, I'd like to break it down, the easy way to actually achieve that is to actually ensure that your investments are spread across different asset classes and also across different portfolios to diversify your streams of income and also your source of income. So as salary earners, what you need to do is to ensure you're actually investing, making your money work for you to deliver returns and income to you. So what salary earners are supposed to do to actually build wealth and actually achieve financial freedom is to ensure that they're actually investing in the right assets, investing in the right investment outlets, and ensure that they have different multiple investments that can actually generate continuous income and cash flows and multiple streams of incomes for them. So example, you have an investment in money market, you have an investment in bonds, you have an investment in other asset classes like that. So if you spread your risks around, diversify your investments and ensure that those asset classes and investment outlets are generating income on a regular basis for you, you're actually on your way to achieving financial independence and building wealth for yourself. So the goal is to ensure you have multiple streams of income. As a business owner, having multiple businesses, and as a salary earner, is actually having multiple investments that can actually generate those streams of income for you. So as a salary earner, there's nothing stopping you from actually achieving financial independence. Just ensure you are diversifying your income and also diversifying your investment to ensure that you're getting multiple streams of income. Thank you.
Thank you very much, Emmanuel. Thank you for helping us demystify and debunk that myth around 9 to 5 salary earners. Okay, now, one way or the other, we must have experienced some sort of inflation. You mentioned clearly how we could diversify our investment portfolio and also our returns, as well as savings and investments. And I want to believe that in one facet or the other, we must have experienced inflation in the country. I think some couple of weeks back, I went to purchase yam, 2 bags of yam in the market, and I realized that yam is now selling for, a tuber of yam is now selling for over 4,000 naira, you know, and that was really, really crazy. Now, I had the opportunity to discuss with some of my friends around the situation of the economy and how people are really feeding or coping out there. And we're able to come up with things around substituting potatoes for yam and all of that. So here's my question. I think I'm just speaking the minds of the audience. What would be your professional advice in the first step to take in building wealth, going by the situation in the economy? So Chukuma, please, would you want to tell us, will you want to help some of our viewers with that clarity? Thank you.
Thank you, Tega. I will start with the saying that you can always make your money work and multiply your money if you invest wisely, irrespective of the economic environment you have mentioned. Multiplying your money, you need to use your money more as opposed to using your time and your sweat or getting multiple jobs. And the simplest way to achieve this decision is to start investing. By investing, you are putting your funds in financial instruments that will yield better return over a period of time. And I would say in a nutshell, if you want to make your money work for you, you have to draw a solid financial plan. You need to be disciplined, irrespective of the economic situation. It boils down to your lifestyle. So by investing, you have to take ownership of your financial plan and your budgeting. What you need now to do is to start implementing it based on what Emmanuel have said over time. Thank you.
Okay, thank you so much, Chukuma. Now we'll turn it over to Chiamaka. Chukuma clearly stated the budgeting rule, the budgeting principle of 50-30-20 on how to apportion your finances, safely say your salary at the end of every month. So Chiamaka, please, how does one get this fund set aside to work for you?
No, I can't do that. Hi, Tega, good morning. So let me take you through the first step to controlling your finances. To lay the groundwork, you must first of all take control of your finances, then use that control to continuously improve your financial stability and security. How do you begin? Our viewers might be asking, and that goes to financial planning. Everybody needs to have a financial plan. Everybody needs to set up a budgeting tool or a budgeting line to be able to make their finances work for them. We all need to categorize our funds into expenses, savings, and investment. And let me speak on budgeting. Now, for budgeting, we all need to go through the formula of the 50-30-20 rule. The goal is to majorly get your money to work for you. For the 50% of our income rule, what happens there is 50% is meant to go to our needs, 30% to our wants, and 20% to savings or investment. Now, let me put us through that in more context. For the 50% needs, what happens is everybody needs to pay rent, everybody needs to pay for HMO, everybody needs to also feed, and that's what goes into your 50%. For the 30%, what happens there is your wants. Now, we might know the saying that, why do we go out in Lagos to spend over 50,000 on a plate of food while everybody can cook at home? And what happens there is that boils down to our wants, where we just want to have fun and we just want to spend a little bit more money because we have much more disposable income. And that also takes us to why we go to the cinema and spend about 5,000 naira, why we can pay for a Netflix subscription that takes us 3 months and it's cheaper. While for the 20%, that's speaking to savings or investment. Now imagine looking at the 20% as the smallest portion of the income, but what actually happens here is it just boils down to consistency and determination. Imagine taking out 5,000 naira every month from your salary from January to December. What happens there is just the multiplier effect. Your income is growing and your money is working for you. And that's why budgeting is very important in financial planning. And with this, I hope that I've been able to explain that the goal for financial planning is just to get your money to work for you. Thank you.
Thank you very much, Chiamaka. It's clear that the viewers right here have been able to speak that they need to get their funds working from them. Clearly, I would state that do not eat your capital. Do not eat your capital, which ought to be your investment amount. You see people travel for vacations, and some of us just feel that, oh, this vacations is being sponsored by our hard-earned salary. Most of us taking vacations, we go on those trips from the dividends from our investments. Okay, some of us obviously one way or the other has gotten our fingers burnt trying to try out various kind of investments. So here's the big question, Chiamaka. What would you like for, what would you tell us, what would be that investment instruments that we could look into for building wealth?
Okay, thank you, Tega.
Okay, I think Chiamaka has a little network issue. What we'll just do, Emmanuel, please, can you take us through on that? What would be the instruments our viewers should be looking at as a go-to for building wealth, which of course guarantees our principal investment and our returns are safe?
All right, thank you very much, Tega. I will take that. And so in terms of having to understand which of the instruments will be preferable for individuals, I think individuals need to understand what their risk appetite is. And so are they people who are actually risk takers? Are they risk averse, or are they risk neutral individuals? And so your risk appetite determines the kind of risks you'll be taking based on your investment. Now, why do I say this? Because each investment comes with their own inherent risks. And you want to understand the risks inherent in that investment before you basically go into it. So if you're a high risk taker, you can do more high risk fund or high risk asset classes such as stocks and also other equity related product offerings. If you are someone who's actually a low risk taker, what you want to do is actually stick to low risk funds, money market type investments that are actually low risk investment. So that determines the kind of assets that you will be investing in. However, to make it very clear to people who want to start investing for the first time, the easiest way to start investing is actually start through a mutual fund. So mutual funds are created in such a way that they basically have mutual funds for different types of individuals. So for the high risk funds, for high risk individuals, you have the low risk funds for low risk individuals. So for individuals who are looking to actually begin their investment journey on their path to actually achieving financial independence, what they need to do is start investing in mutual funds. Look for the right mutual funds that fit your investment profile. So if you're a low risk individual, you want to have a fund that basically preserves your capital, that you understand that your risk is low and you don't want any diminution of capital. Money market type mutual funds are your best bets. If you are someone who is actually a risk taker who wants to go for high risk investment, because the higher the risks, the higher the returns when it comes to investment. So if you're looking to take higher risks, you can go for more equity type or mutual funds that can actually guarantee you higher returns on the long term. So once you have that spelled out, you understand what your risk profile is, you can actually now start deciding which of the mutual funds you want to start investing in, because mutual funds are the easiest route to start investing for individuals who do not have the expertise or the time to basically monitor the markets actively. So my advice for individuals, start with a mutual fund, start with one of the mutual funds that fits your personality, your risk appetite, and you're actually good to go in terms of your investing. Thank you very much.
Thank you very much, Emmanuel. And thank you for breaking down the asset classes. And thank you to all our speakers and most importantly, our participants out there. Just a quick reminder, I'm sure you all have questions burning up in your mind. Please do not fail to push those questions and of course, comment to us via the question and answer box and also the chat box. For those of us joining through the YouTube, please, we use the chat box to share your questions, and of course, comments will be readily available to take those questions and comments. Now we're going back to our discussion. Emmanuel expressly talked about the mutual funds. So Chukuma, please, can you recommend for salary earners, what kind of mutual fund should we be looking at for salary earners? And also maybe you can also throw some light on the type of mutual funds we have here with United Capital.
Okay, thank you, Tega, for this question. So the kind of investment I would throw to a salary earner is specifically a money market instrument. But some salary earners might determine the kind of investment they want to do with respect to their time horizon, their risk appetite, and their kind of the return of investment they're expecting. So in United Capital, we have different types of money market mutual funds, which are about 6 of them. The money market fund, the Wealth for Women fund, the balance fund, the fixed income fund, the Eurobond fund, the equity fund, and the Sukuk fund. So we can discuss at length on how we have the specific ones that are guaranteed and the ones that are not guaranteed. Some of the mutual funds are strictly invested in money market instruments, like the money market fund I said, which is specific for salary earners, while the Wealth of Women fund is strictly for the female gender, for financial inclusion reasons, and so that the women will have also financial accessibility. And the balance fund has some equity in it and some magnitude of fixed income to allow it to be balanced. The fixed income is strictly investing in some corporate bonds and some federal government bonds. The Eurobond fund, United Capital Eurobond Fund, is strictly our dollar-denominated Eurobond that is open-ended also. It gives return on investment, which are called dividends, which are annually. The equity fund is strictly for those investors that don't want to go directly to the equity market and they want to actually balance their investment and not get burnt in the stock market. The Sukuk fund are ethical funds that we allow investors to especially our Islamic folks that want to buy, don't want to defeat their issues of their faith. So in United Capital, we have buckets of this. And how much does it cost for you to invest in our mutual funds? It's simply 10,000 Naira you can invest in our mutual funds. And that is what we are preaching for salary earners like all of us here. We should start immediately and decide a particular function of how much we want to keep aside for on a monthly basis. And we immediately will start that. We have started investing. Thank you.
Thank you very much, Chukuma. And now I think we all have a background understanding of how the mutual funds work and safely say the money market fund and how we can get it to work for us. Now, I don't know, Chiamaka is still with us here on the call. Chiamaka, can you please tell us some of the advantages of the mutual funds in comparison to other products for investment?
Okay, hi Tega, thank you. So the advantage of the mutual fund is you have different types of mutual funds depending on different personality types. For example, like Chukuma has mentioned, we have the risk-adverse individual, we have the risk-seeking individual and the risk-neutral individual, and people in terms of short and long-term goals. What happens here is we are able to pair the clients depending on their investment class and also risk appetite. So for example, if we take you to the money market fund is a pool of mutual funds where we're going to be putting individuals that have the same investment objective of being risk tolerant. While, for example, our Eurobond fund is going to be helping you hedge on terms of Naira devaluation and also currency issues. And the client types in that pool are going to be having their income in USD. Now, going to the equity fund as well, another advantage is a lot of clients or individuals don't actually have background knowledge on the stock market. So the mutual fund helps you take away those issues and stress of having to learn about all the types of stocks or instruments listed on the exchange. And you get to be able to have fund managers who are very well licensed doing the background work for you. Also, another advantage is basically being able to invest with a minimum of about 1,000 Naira. Now, what has happened in the society we're in is a lot of people are not able to invest properly because the minimum amount for a lot of investments are either in billions or millions, and that restricts a low salary earner from being able to tap into these opportunities. So what has happened with the mutual funds that United Capital has put in place is being able to take away the stress from you of having to learn a lot about different investment types before you invest. Another advantage is you can start with a very low amount of money and you can get income, you can get your capital to also work for you. Thank you.
Thank you very much, Chiamaka. That was a detailed feedback. Thank you. There is this conception around the mutual funds investment paying dividends, and you see some people also clamor for returns of investment different from the dividend being paid. So Emmanuel, please, can you explain to us what dividends are and also the returns on investment on the mutual funds?
All right, thank you, Tega, for that. First of all, I should say that all our funds basically make dividend payments to the unit holders. So for the money market fund, that income distribution is done on a quarterly basis, while for all the other funds, we do it on a yearly basis. Now, dividends are not additional income to clients. They are basically part of the returns on the fund, which are now paid out in cash or reinvested based on clients' instruction. So to put it in perspective, the fund basically had made some amount of money already, which is the growth that you've experienced in the fund. And out of that, what the fund manager does is to basically now make a dividend declaration out of that profit and actually distribute it to the unit holders. Now, that dividend is either paid to you as cash into your bank account, or you can choose to basically make the principle of compounding interest work for you by choosing to reinvest your dividend as opposed to now taking it out and spending it. So once it comes in back as reinvestment, what happens is that your dividend, which is your income already, now start generating additional income for you. So you're getting income on previous income, which is the principle of compounding interest. So that's one of the benefits of investing in mutual funds, whereby you can have the principle and the power of compounding interest start working for you and multiply your income beyond what you can actually think of. So that's how dividends work for the mutual funds. And one of the benefits of investing in mutual funds is also the dividend that clients are able to get, which are able to compound for them and generate additional income and return for them. Thank you very much.
Thank you very much, Emmanuel. There are so many questions popping up already, and we need to start providing answers to them. Just before we jump into that, Chukwuma would want to hear from you firsthand. We've heard a lot about the mutual funds investments today. Now, I'm sure most of our viewers will want to hear, how can they get onboarded on this process? What are the jump sticks? What are the ropes to hold on to? How do they open the account? How do they get across to us here at United Capital?
Thank you, Tega. To invest in our United Capital mutual funds is for investors and all the salary earners. You can simply visit our investnow.ng, or you can even download our InvestNow app on Google Play Store or iOS App Store. Our InvestNow, United Capital InvestNow is our online platform for investing. It's a made easy internet bank, like an internet banking app for investing. So you don't need the rigor of, if you have a browsing phone, you can just go to Play Store, download it. You can go to Google Chrome. You can use investnow.ng. So the account opening process is very simple. The form is online on the InvestNow. You fill the form. You select the particular investment you want to open, especially the mutual funds, any of the classes that suits you. You can also request for the hard copy form from any of us, from any of our offices located everywhere in Nigeria. So you can also fill the form, and also on that app, you can also submit your KYC details, your valid ID card, your passport, and your utility bill, and your signature specimen. It's even simple to do that. You can even contact us at our email, assetmanagement@unitedcapitalplcgroup.com. And if you are located in the southern region of Nigeria, any state of Nigeria, we have regional office locations from our Port Harcourt office, which is stationed in the UBA regional office, first floor, 14 Azikwe Road, Port Harcourt. Our Onitsha office is located at the UBA house in Onitsha, 40 New Market Road, Onitsha, Anambra State. If you're in Delta State, Warri, you can also go through our offices that is located in the UBA building, 39 Efuru Sapere Road, Efuru, Delta State. So we are everywhere. You can visit our website also. And if you need more information, our emails will be put on the chat box and our phone numbers so that you can contact our sales representatives or our customer service. So feel free and start investing now. Thank you.
Thank you very much, Chukwuma. Thank you so much. I want to believe that we'll drop all the accessible means to reach out to us here at United Capital on the chat box as well for you to be able to reach out to us and also get onboarded at the moment. So we're going to be taking questions. There's no time to take questions. And I'm so delighted. We have a question here from Miriam Abu. Thank you very much, Miriam. Miriam is asking, how frequently do companies announce dividends and how do we always have to go to the newspaper to check? Okay, that's a question in two segments. One is how frequently do companies announce dividends? And two, do we always have to go to the newspapers to check? Emmanuel, I don't know if you want to take that question from Miriam Abu.
All right, thank you very much, Tega. I think it should basically provide more clarity on that. Companies which are companies who have their shares listed on the stock exchange are quite different from mutual funds. So starting with companies who basically declare dividend, it depends on the dividend policy of that particular company. And so you can have companies who pay interim dividend and basically pay final dividend. So you can have two announcements within the year. And there are some companies who basically make only one announcement at the end of their financial year. So when they release their full year results in the first quarter of the new year, then you get the announcement for dividend. And why some other companies, their financial year does not align with the calendar year. So you might actually have their financial year in between the year and they have to make those announcements. So one of the places you can actually get that information is the Nigerian exchange website, the NGX website. All dividend declarations by all companies listed on the exchange are basically made on that particular website. So if you're looking to get information on dividend declared by companies, you can actually go to the NGX website for that. Now, coming to mutual funds basically, depending on the type of mutual funds, like I mentioned for us, money market mutual fund make dividend payments on a quarterly basis. So every quarter you get dividend payouts to the unit holders. While for the other funds, we do an annual dividend distribution for the fund. So you will see that for the money market fund, you will have that 4 times in a year, while for the other funds, you have them once in a year. So that's how dividends work for both mutual funds and also for listed companies on the stock exchange. Thank you.
Thank you very much, Emmanuel. Miriam Abu, I want to believe we'll be able to provide clarity to some of your questions. Now we'll go over to another question. There's a question from Chidima Okeke. What is the interest rate currently on the United Capital Eurobond Fund? Chidima Okeke, what is the interest rate currently on the United Capital Eurobond Fund? Chiamaka, would you want to provide answers to that question?
Okay, thank you, Tega. Hi, Chidima. The current rates on the United Capital Eurobond Fund is about 5.74.
Okay, thank you so much, Chiamaka. Quickly, we'll just take a question from an anonymous attendee, tying down the question that was asked from Chidima Okeke. He or she is asking, please speak about your Eurobond fund in details. Why should I choose United Capital Eurobond Fund over other Eurobond fund? Emmanuel, please, would you want to give answers to that question?
Absolutely. Thank you very much, Chidima, for that question. For the Eurobond Fund, like I said, is actually a fund designed for clients who have dollar assets and they want to look to how to deploy and maximize returns on it. So the Eurobond Fund provides you protection against devaluation and also inflationary pressure. And so for individuals who have dollars or who are looking to actually start saving and ensuring that they actually are able to keep their investments against any devaluation, they can actually start investing in the Eurobond Fund. Now, what's peculiar about the United Capital Nigerian Eurobond Fund? For us, one thing we know is that we are able to constantly deliver high returns to our clients over the years. And so if you check past returns on the fund, have constantly beaten the benchmark for the fund and also being able to outperform other similar funds in the market. So we pride ourselves on being very competitive and giving competitive returns to our clients. So due to our expertise and our knowledge of the market, we have been able to provide superior and consistent return to our clients who invest in that particular fund. So I would say, comparing to other funds, you are sure of getting very good returns and also getting very good services from our customer care agents when you invest with United Capital. Thank you.
Thank you, Emmanuel. I want to believe that you're already going on the link to get onboarded on the Eurobond Fund, all of our participants. Now, okay, yeah, hello, Jumoke. We see your question. So Jumoke is asking, please, can you categorize the mutual funds according to their risks? Which one is low risks and which are classified as high risks? Chukuma, please, would you want to provide clarity on that?
Okay, thank you, Taga. Thank you for the question. The low risk mutual funds are mutual funds that provide, that guarantees your principal. For instance, the money market fund is a low risk mutual funds. The balance fund, the United Capital Balance Fund, the welfare women fund, and the equity funds are high risk mutual funds. The Eurobond is also at the class of a low risk mutual funds, also our dollar Eurobond fund. The Suku fund is actually a low risk mutual fund also. The fixed income fund, which are strictly invested in corporate bonds and government bonds, are in the class of medium risk mutual funds also. So it depends on the investors or the salary earners' risk appetite. So I see another question that someone asked also. I want to link it to this question that you don't, in the terms of economic situations, that is very hard. How can someone know what to do or the kind of investment to do? You don't need to even have as much money to also much liquidity to dive into the United Capital mutual funds. Just decide what you want to do. As low as that small amount of money, you can set aside funds for yourself. And our invest now can allow you navigate and run your investments without recourse to anyone. It's a made easy app. So the mutual funds have both low, medium, and high risks. So the money market is a low risk. The fixed income is a low risk, depending on the investor's appetite also and how the investor wants to wait for the return on the investment, which comes on a yearly basis. Why the money market, as Emmanuel have explained before now, also pays dividends every quarter, and it assists the funds to compound easily. The equity fund, the balance fund, they have atoms of equities in it, so it's very high risk. So it depends on investors that don't want to go and face the hassle of the stock market directly. So salary earners, feel free, contact us. United Capital Mutual Funds can solve quite a lot of problems, and it is free entry and free exit, and you are guaranteed that we have the expertise to navigate you through the market, and you will learn a lot from investing in United Capital Mutual Funds. Thank you.
Thank you very much, Chukuma. Jumoke, I want to believe that we've been able to provide clarity to your question. And with this clarity, I want to believe that you should be able to take informed decisions, informed investment decisions going forward from today. Thank you very much. Another question here from James. Hello, James. We're happy to have your question. James Okorie, he's asking, I believe I'm not mixing that. Yes, he's asking, what is liquidity like with the mutual funds, the turnaround time for taking back his funds? He wants to know. Emmanuel, please, would you want to talk on that? What is liquidity like with the mutual funds? How soon can he get his funds out of the system?
All right, Tega, thank you very much for that question. In terms of the turnaround time for liquidations from the mutual funds. And for the Naira mutual funds, what we try to do is to ensure that within 24 to 48 hours, clients are able to get their funds in their bank accounts. And for the dollar fund, which is the United Capital Eurobond Fund, we give a minimum of 3 to 5 working days just to ensure that you can actually get your dollars in your bank account. And that's due to the peculiarities about moving dollars between banks, because you can have direct movements between banks like you have for Naira. Most of the dollar have to go offshore and come back in again through the correspondent bank. So that takes a bit of time. So that's why for the dollar denominated fund, you have more time, about 3 working days to actually get the funds. But we're able to do that in less times. Most times we're able to do that, but we basically ensure that we don't exceed the timeline that we've given to our client. But for the Naira funds, like I said, within 24 hours to 48 hours, your funds will be sitting back in your bank accounts once you make the redemption request. Thank you very much.
Thank you, Emmanuel. Thank you very much. I mentioned earlier that shout out to all our participants around the globe. And we have one of our diaspora participants here, Jim Ugogo. Jim Ugogo is asking, can I invest from abroad? What is the payment process like? Chiamaka, please, we do want to give an insight to that on how people at the diaspora can invest back here at home in Nigeria.
Okay, thank you very much, Tega. So yes, our mutual funds allows everybody invest from all over the world, and you can easily invest in our mutual funds all over the world. Like Chukuma mentioned earlier, you can use the Invest Now app. It's very seamless. You get your funds when you want it, and all you have to do can be done on the app.
Okay, thank you very much. Thank you. Okay, now we have another question from Isaac. Isaac is asking, hi, I'm joining from DS, US. Please explain what you meant by unguaranteed return on your investments. Chukuma, please, you want to give us an insight to that?
Okay, so thank you, Tega. Unguaranteed return on your investment on any of the mutual funds that are unguaranteed are those mutual funds that are at the category of the medium to the high risk. So let's say a low mutual funds will guarantee you a particular return for that particular day, and your principal will not be eroded. But when you go and invest in equity fund or the balance fund or the Wealth for Women fund, those funds are, depending on your appetite or your risk appetite and your kind of investment horizon, you can just be aware that those funds have stocks and equities in it. So the return on those investments are not guaranteed. So that's what it means. So a guaranteed return on investment is strictly an investment that has a particular rate of return for that over time, and you will get that return specifically in your account. But for mutual funds, the return on investment are based on a daily basis, which means the return for your funds on that day will be guaranteed for that. But when you go and invest in unguaranteed mutual funds, like the balance fund, the equity fund, and the Wealth for Women fund, you are trying to mitigate risks inherent in the equity market. So that's why you are going to get unguaranteed return on your funds upon payment of the dividend. Thank you.
Thank you very much, Chukuma. From all we have heard today, it's clear that one of the values of successful people is execution. And I think from one of the questions we have on the chat box, it's clear that someone has set up the account already. And Regina Austin is asking, how much can one start with the Eurobond fund? So for Eurobond investment, Regina wants to know how much she can start funding her investment accounts with. Chiamaka, please, can you provide answers to that? Do you want to take it?
Hi, sorry, Tega, please, can you take the question again?
Regina Austin Oshwegbe is asking, how much can she start the Eurobond investments with?
Okay, she can start the Eurobond investment with as low as $1,000 and then continue to increase it frequently as much as she requires.
Oh, thank you very much. So you see, Regina, it gives flexibility and opportunity for you to start as soon as possible. So we'll just take another question here from Samson Anthony. Samson Anthony is asking two questions. The first one is, what are the low risk indicators in a choosing investment portfolio? It seems like you've gotten your hands burnt right there. Okay, so Emmanuel, please, can you give answers to this question? What are the low risk indicators in a choosing investment portfolio? That's one. Then secondly, with the rising economic strain and high cost of living, one may need to ask, how can one maintain consistency in a choosing investment?
All right, Tega, thank you very much for that. And also Samson, thank you for that detailed question. So I'll start with the second question about having to maintain consistency in terms of having to continue investing in your choosing investment. I think the first thing that needs to be done is discipline. Investing requires a high level of discipline. And so if you want to also ensure you achieve your financial goals and also build wealth, you need to be disciplined in your approach to investing, because if it was easy, everybody would do it, because discipline doesn't come easy to most people. So you need to be disciplined. And one of the ways to actually ensure you are disciplined on your investment goals is actually to set up a direct debit on your account. And you can actually get that functionality on our Invest Now app. So you can set up that every month, I want to put 10% of my salary into my investment, 20% of my salary into my investment. You set up the amount to be debited. So on a monthly basis, you don't have to make that effort. The system basically would actually do that on your behalf, debit your account and credit your investment accordingly. So that's one of the easiest ways to ensure you maintain consistency in your investment. Then talking about the low risk indicators in your chosen investment, I think you need to understand what are the underlying assets that are in that portfolio you are looking to invest in. And so that will make you understand what are the risks inherent in that portfolio. So if you have a portfolio is made up of low risk assets, such as money market instruments, which are low risk assets, you will know that that particular portfolio is a low risk fund. However, if you have high risk indicators, such as high risk assets, equities, volatile bonds, and the rest of such high risk asset classes, you understand that that portfolio is actually a high risk portfolio. So what gives you the indicator of the risks is the underlying assets in that investment portfolio. So once you understand that, you basically understand what kind of portfolio you are investing in, if it's a high risk portfolio or a low risk portfolio. So with that, you are able to make your choice more informed and also have a clear view of what you're investing in. So you always understand, what are you investing in? What is the underlying assets in the portfolio you're investing in? Once you have that clarity, you understand the risks inherent and be able to make the choice of either investing in high risks or investing in low risks based on your personality and risk appetite. Thank you very much.
Thank you very much, Manuel. Samson Anthony, I believe with this answer, you should be able to safely spread your risks. Now, there's another question we have here from Biodun. Do you have fact sheets, and how can I see the last performance on this fund? Chukuma, please, would you want to answer that question?
Oh, yeah, Tega, thank you. Biodun, we have fact sheets on a monthly basis. The United Capital Mutual Funds, the fund manager finalizes the fact sheet and sends to all customers' emails. And upon request, you can also download it from our United Capital Asset Management website. And you can also contact us. As a customer of United Capital, you have the fact sheets on your emails on a monthly basis. And upon request, we can send it to you. Thank you.
Thank you very much, Chukuma. Olufisayo Basi is asking, Olufisaya, thank you for this question. What is the minimum lock-in period for the mutual funds? What is the minimum lock-in period for the mutual funds? Chiamaka, please, would you like to give us an answer to this question?
All right, thank you, Tega, for that question. Okay, hi, Olufisayo Basi. So for the money market fund, you can enter and exit at any point. But for the Eurobond fund, fixed income fund, minimum lock-in period of 90 days. I hope that answers your question, Fisayo.
Thank you very much, Chiamaka. I want to believe Fisayo's question has been comfortably taken care of. We'll try to round up now. We'll just take a last question now. Okay. Hi, Chinonso Wangpo is asking, is there an investment fee? If yes, what is the rate? So Chukuma, please, I don't know if it's possible, if you are comfortable with running us through how to get onboarded on the investment, the mutual funds investment, and if there's an investment fee to be charged upon onboarding.
Okay. Thank you, Tega. Thank you for that question. The mutual fund actually pays dividend, and based on the risks inherent in specific class of these mutual funds, we categorize it as low, medium, and high. The money market funds, upon onboarding, every quarter, the funds has a fee of 1% on the fee, while other mutual funds have a fee of 1.5%. That's that, which are statutorily recommended by SEC. Thank you.
Okay, thank you very much. Thank you so much. So please, just the last one more question before we go. I want to believe Sonia joined in late. Sonia is asking, please, how does the money market fund work? Chukuma, please, just again, will you be able to tell us how in details the money market fund works?
So, thank you, Sonia. Thank you, Tega, for this question again. The United Capital Money Market Fund is a Naira-denominated mutual funds. So the funds are strictly invested in money market instruments. And money market instruments are like the fixed deposits, the bank placements, the commercial papers, BAs, bankers' acceptance. So the funds has a minimum locking period of 30 days, and you can sign in within 24 hours. And when you go to our app, you can download the app and fill our form, and you click you want to set up a money market fund. The minimum amount to sign on our money market fund is 10,000 Naira. You are free. Every quarter, we pay return on investment, and you can decide to opt for reinvestment of your dividend, or you can also pay it out to your bank account. So it's a low risk investment, and that is very specific investment that was recommended for salary earners. Even in this platform, we have discussed that. So feel free, contact us, download our Invest Now, and sign on our money market fund. Thank you for that question.
Thank you very much, Chukuma. Thank you to all our speakers, Emmanuel, Chukuma, and Chiamaka, for sharing with us this morning from your wealth of knowledge. It's really been an insightful section. Thank you very much. And to all our participants, I am excited. I'm excited that you were able to log in on this call, and it's been an interesting one having you all around the globe on this section today. Okay, I would also like to mention to you that this section is going to be a monthly section, and it's going to be running all through a section each month. So please do well to download our investment app, investnow.ng. It's on, for those using the Android, is on Play Store, and for those using iOS, is on Apple Store. Please download the app and get started now. There's no earlier time and there's no later time. Now that you have the information on how the United Capital mutual funds work, be it the Eurobond Fund, the money market fund, the balance fund, and equity fund, you need to start now. You also heard our speakers say clearly how building wealth for yourself as a 9-to-5 earner is, first of all, a disciplinary process. You have to discipline yourself. For those of us who are Christians on this call, don't worry, we'll come to the Muslims. For those of us who are Christians on this call, I believe you pay your tithes. For those of us who believe in paying tithes, I believe you pay your tithes, which is the 10% you give to God. Yes, for keeping you alive, for basically a soft life, allow me to use that word. And for the Muslims, you pay what is called zakat, if I'm not wrong, you know. So you have to create a disciplinary culture for yourself by also paying yourself, right? We talked about the investment rule of 50-30-20, and how from time to time you can also adjust that rule to suit your current income or returns. So please, and please, you need to start imbibing the disciplinary culture by paying yourself on a monthly basis. Tell yourself, well done, a job well done for a month. You know, it's not just enough. I know we, for those who are bankers, we just hail ourselves from God and say, banker now, banker. For the ladies and guys on this call, you see your friends hailing you and saying, my rich friend, my sponsor, my sugar mommy, you know, stuff like that. And like, that's because you are the one doing the spending. That's because you bring your funds to the table and it's shared. And at the end of the day, you have nothing left for yourself. So please, please, and please, today, try and download our Invest Now application or visit our website at www.investnow.ng to open a mutual funds account today. So thank you again to all our speakers for joining us, for being available, for creating time out of your busy schedule this Saturday, right, to speak to us on how to build wealth as salary earners. And thank you to all our participants around the globe for joining us on this call. And I encourage you all to take a minute at the end of this section to fill our feedback forms. Your questions will be attended to. This really does help us guide our future sections. Like I told you, we'll be having a monthly section going forward. So please do fill our feedback form and sign up on the Invest Now application today. Thank you very much. Thank you.
Thank you.